Hello and welcome to your most authoritative business analysis program here on TV3. It's Business Focus and I'm Eton Amsim. Over the weekend, while swearing in the reconstituted Bank of Ghana board, President Akufo-Addo charged the board to investigate high lending rates charged by commercial banks. President Akufo-Addo described as not right the wide gap between the policy rates of the Bank of Ghana and interest charged by commercial banks. According to him, the disparity was a setback to efforts at making the private sector competitive and therefore charged the central bank to interrogate and find a solution to the issue. Is the commercial bank or are commercial banks guilty of being unreasonable with rates on lending? How do we cushion the private sector and make it competitive, especially with the AFCFTA in mind? That's our focus for tonight. My name once again is Eton Amsim. I'm sitting in for your regular host, Alfredo Kansi. First, a look at stories making headlines in the world of business.
Just recently.
Is this recently? Yeah. Okay, yes. Thank God. So you are saying what? Alfred, so you are saying what? The continuation of this one. Okay. Okay. So which one are you saying I'm going to explain? So I'll start by saying.
On the screen.
Okay.
So
what am I supposed to say? Yeah.
Bring it now.
Okay.
So then after your intro, then welcome the guest, and I'll put it on.
Okay. Okay. So we'll play the president's thing while we are waiting. Okay. So let's stand by the president thing then. Welcome back to your most authoritative business analysis program here on TV3. Remember, Business Focus is brought to you by Absa Business Internet Banking. It says, grow your business, don't get stuck behind your desk. You need to be on the move, making moves, opening doors, and closing deals. Luckily for you, now you can do all your business banking on the Absa Business mobile banking app and grow your business on the go. So wherever you go, your business goes with you. Make transactions, approve payments, and check balances from any smart device, anytime, anywhere. Use the Absa Business mobile banking app for your business. It is another digital solution that gets things done. That's Africanacity. That's Absa. Visit absa.com.gh and do business on the go. Like I said earlier, President Akufo-Addo is questioning the gap between the policy rate and the lending rate. He says that the policy rate currently is at 13%, and he cannot reconcile that with how much banks are charging, which is averagely around 20%. He says the gap would have to be bridged if government will realize the vision of making private sector competitive. Let's take a listen to President Akufo-Addo.
It is surely not right that the central bank's monetary policy rate stands at 13.5%, whilst the commercial banks lend to the private sector at rates of 21% and above. This is a gap we have to bridge if we are to realize the vision of a Ghana whose economy is globally competitive. I believe the Bank of Ghana is best placed to lead this process of reflection and action.
Welcome back to your most authoritative business analysis program here on TV3. President Akufo-Addo there telling us why he thinks it's not right for the policy rate to consistently be brought down, reviewed downward, and lending rates are still high. And here with me in the studio, we have our guest joining us tonight. Dr. Joseph Obeng is president of the Ghana Union of Traders Association. Good evening, sir. We also have been joined in studio by Solomon Tettey-Akpeng, who is the credit risk facilitator with Chartered Institute of Bankers, also another major stakeholder. Hello, good evening, sir.
Welcome.
We'll also be joined via Zoom by Professor John Gachi, who is the Dean of UCC Business School. Just so we know exactly where the problem is the commercial banks really taking Ghanaians for granted? Now, the country's banking sector holds half of the country's domestic debt, just so you know, meaning that the financial sector has become more comfortable investing in government instruments, if you look at what's on your screen, and than what is happening in the private sector. Situation that a financial analyst says is a threat to the recovery plan. If you look at the figures on your screen, according to Bank of Ghana's statistical bulletin reports, out of the total domestic debt of some 171.7 billion cedis as of May 2021, the banking sector, which includes the Bank of Ghana and commercial banks, holds some 86.5 billion, representing 50% of the debt, and it's an increase in the 20 billion cedis from May 2020. When further broken down, as you see, 86.5 billion of the Bank of Ghana holds 34.6 billion cedis, while commercial banks hold some 51.8 billion cedis, indicating that commercial banks are very active in the bond and treasury bills market. Now, the structure of domestic debt further reveals a whopping 104.8 billion cedis is made up of the investments in government's medium-term bills, such as 2-year treasury notes and 10-year bonds. So, I mean, clearly, private sector is being crowded out. I mean, that's been the conversation, that we are really not getting the private sector to access what they're supposed to be accessing because commercial banks are comfortable lending to government. Now, let's set the ball rolling. Good evening once again. So, I'll start with you, Chartered Institute of Bankers. Are commercial banks taking Ghanaians for granted?
I'll say no. Yes, they're actually looking at the realities on the ground. Yes, looking at the Ghana reference rate, which is dependent on the monetary policy rate. Between April 2018 to date, the monetary policy rate has reduced by about 4 percentage points. And this reduction in the GR, which is the base rate for all the commercial banks, has actually been passed on to customers, borrowers. Yes, so there is some reduction in interest rates across board in terms of the Ghana reference rate. But then the cost of credit, yeah, it is what determines the spread.
Are you able to calculate the reduction? Because we are very much aware that years ago, when you see the rates going up, I mean the policy rates, you immediately see the ripple effects on interest on loans. But it doesn't happen the same way when we have the rates reduced. And consistently, over the past years, we've seen the policy rates go down, but we don't really see that reflects on interest on loans.
Okay, the policy rate drives the Ghana reference rate.
Exactly.
So I would make reference to the Ghana reference rate. As at April 2018, when we started the Ghana reference rate, the rate was 16.80. And as at August, it's come down to 12.61. So the differential is actually, you don't have any option than to pass it on to your borrowers. So at least banks have passed on that reduction in GR to borrowers. Yes.
By what percentage?
It's about 4.19, roughly 4.2%.
So let's compare that to how much we have seen the policy rate reduce. Does it commensurate?
Yes, the GR is a function of several parameters. The monetary policy rate is one, the interbank rate is also one, and then the 90-day T-bill rate is also one. So it's a model, and you feed the MPR is only one input, but then it churns out the Ghana reference rate with banks or banks.
But why is the gap so, and I'm not being so hard on you, but because I'm a customer myself, why is the gap so wide, 13%, and we are seeing averagely 20 and over % with interest on loans?
Yes, it's the cost of credit, because
aside
the operational cost. And I will make reference to statistics from the central bank regarding financial sector performance. And as at maybe the first quarter of this year, the NPL ratio had shot up from 13.8% to 15.3%. And by the NPL ratio, meaning loans that are at risk, non-performing. And if you adjust it by the fully provisioned loans that are bad and have been fully provisioned, it also saw an increase from 5.21% as at February 2020 to 6.5% in February 2021. So that tells you that the cost of credit, especially with COVID-19 lingering around, banks are still battling with NPLs. And for that matter, it's adding to the cost of credit. And
your general cost of operations.
Exactly.
Okay, I'll come back to what the president says, but let me first ask Dr. Joseph Obeng, who is the president of GUTA. I mean, you heard what the president said. He says we should blame commercial banks because clearly government is doing their best through the Bank of Ghana to ensure that rates are down. Your take on that?
It's a cartel. They form a cartel.
Who forms a cartel?
The banks. Because there should be competition. But once they are all operating around the same lending rates and all that,
put on your,
means that they are talking. And there should be a compelling mechanism to pull them along.
No, so if you're saying there's a cartel, so there's a cartel between government and commercial banks?
No, among the commercial banks. They have an association. They talk among themselves. It's very bad. It doesn't show they are behaving like a monopolistic situation. But we are in a competitive world, which is very bad. So there should be a deliberate government mechanism that will necessarily pull them along. Elsewhere, because we have liberalized the trade, the economy, but that does not mean that we should not control the trade of money. It is very bad. That's why the central bank is there. It should not be said that they are protecting only the banks against the depositors who are not getting anything. So if they he was talking about the cost of credit being high, and then he dwelled on risk. and they're defaulters. That is archaic. That is not modernity. If I go and pay for my insurance, they look at my risk level, and then I pay the premium as such. And that the one who has the high premium is set out to pay more. So you do not lump all risk together and then spread it among even the good one and the bad one. And that's how the Ghanaian banker is doing. It's unfair. You have to compensate the good borrower and then punish the defaulter.
Okay.
That's how it should go. And so it's a rip-off. Because it shouldn't be that the benchmark rate is at 13, and then you are still hovering around 23, 22, where it does not pull it down. That's
so for
why
you, you're not seeing it reflect, because Mr. Akpeng says we are seeing it. We are actually ensuring that the policy rate is having an impact on lending rates. You don't agree?
No. It's not working.
It's not working.
It's not pulling it along.
Okay.
I don't know where you got his figures. So you should have said that maybe now the interest rate is 19, as against the 20, 22, 23 they were charging. If you say that, then...
No, I haven't seen 19 anywhere yet.
Exactly. It means that it hasn't come down.
It's averagely around 20 and beyond.
And that was what it used to be, because it was 23, 24, 25. And when you bargain with the bank, sometimes you get the 20 and 21 and 22.
Okay. I'm sure he has a reaction on that. But let me speak to Professor John Gachi, who is joining us from University of Cape Coast. He's the Dean of Students, the Business School, University of Cape Coast. Good evening, sir.
Good evening.
Right. President Akufo-Addo says we should put the blame on commercial banks for not reducing interest on loans, because clearly interest policy rates consistently have been reviewed downward, and is talking about and encouraging the Bank of Ghana, the new board sworn in, to ensure that they investigate what actually is happening. What's your take on that?
Well, I think it's a simplistic statement to say that we should blame the commercial banks because interest rate is determined, or the lending rate is also determined by factors that should be blamed on the management of the economy. And the mere fact that you reduce policy rate does not necessarily mean that lending rate will go down. Now, you will recall that most of the reduction in the policy rate were not followed by the main indicators that should be triggered to reduce policy rate. Part of the exercise was to contribute to the effort of reducing the effect of COVID-19. If we were to follow economic indicators properly, I'm not sure the policy rate could have been reduced to the level we are talking about. If you do not look at these factors and you reduce the policy rate, commercial banks will not necessarily reduce the policy rate to reflect, reduce the lending rate to reflect the policy rate. So that is the reality that I think we should face.
What are the indicators? The indicators we're talking about. What would that be?
We are talking about
sit up a bit for me. Okay, not too far from me. Yes, perfect.
Yeah.
So the indicators you speak about are that you said was not considered.
We are talking about inflation.
Okay.
We're talking about some fiscal measures and the effect it has on the policy rate development. We also talk about the risk to the economy. And this risk to the economy has been apparent over a period of time. But because we've all agreed that we should use some monetary policy measures to deal with COVID-19, initially we have to reduce policy rate by about 2 times without necessarily considering these factors seriously. So I do not think that the reduction in the policy rate by this means would trigger significant reduction in the lending rate. And that fact must be looked at critically before we argue that it is the commercial banks who have to reduce the interest rate or the lending rate. And again, the regulator who is supposed to look at the books of the commercial banks to know whether they have the capacity aligned with there are indicators to show that they have the ability to reduce the lending rate before they are not reducing it, is actually under the control of the government. So if the government cannot talk to the regulator that per this record, the commercial banks can reduce their lending rate, but they are not reducing it, use regulatory action to ensure that they reduce the lending rate, then I'm sorry, that statement is not coherent with the reality that commercial banks face vis-a-vis they are working with regulators.
Let's look at the reality. The reality is that the cost of borrowing is high. I mean, especially with AFCFT around, if our neighboring countries are borrowing at cheaper rates, we look at Nigeria and other African countries, then it means that clearly Ghanaian producers cannot be competitive. Obviously, cost of lending rates will be an input in the final products that we're going to be selling. It means we will not be competitive. So looking at what the realities on the ground is, what should we be looking at? You spoke about inflation. Relatively is low. You disagree?
Well, I think inflation relatively is low, but if you read the Monetary Policy Committee's report, they don't just pick inflation and say because inflation is down, policy rates should go down, even though we are following inflation targeting. That is not what they have done over the years. It is a fact that we are not competitive when it comes to lending rates. And this is something we should work assiduously to put down the lending rate environment in the country to stay competitive, especially in the face of the opportunity provided by the continental free trade area that we are discussing. But the way forward is not to put the blame on commercial banks. The way forward is to engage our trade associations, is to engage the regulator, is to engage the economic agents and those who manage fiscal policy, that I'm talking about Ministry of Finance and the regulator, so that we fashion out how we are going to ensure that with time we can really reduce the lending rate. But it is not about putting the blame on the commercial bank. Commercial banks are takers in the market. So what the market provides, that is what they fuse into pricing their loan packages to various categories of people who come to take the loan. So those underlying factors is what government must work seriously to deal with. And that is what the regulator must work assiduously to address. Without that, you cannot give command for lending rate to go down. It doesn't work like that.
Okay. Professor Gachi, I'll come back to you for us to look at what you said about engaging the associations, engaging the regulator and the economic agencies. I'm wondering what exactly will be discussed with this engagement and how this is going to ensure that we are having the lowest rates as possible. But I'll come back to you on that.
I believe you heard the representative of the Trade Traders Association making each statement with respect to the insurance policy that premium that they pay when they contract loan, etc.
Right.
Those are issues that to come to the table for us to discuss. So you cannot trivialize the engagement with this group of people.
Okay, but these are key issues that we should be looking at, because the banks are also looking at the operational costs. Don't forget that. If my operational costs are high, you don't expect me to reduce my interest on my loans. No?
That is exactly so.
Exactly.
And
okay.
I made the point about that already. So that is why you need to engage all this group of people. You shouldn't isolate one and think that because you can engage with the Bank of Ghana as a regulator under your outfit, even though they are supposed to be independent and they have reduced the policy rates consistently, then people's money who are actually mobilizing funds at high cost should also reduce the lending rate when the cost structure does not actually reflect what you are expecting.
Okay, Mr. Akpeng, so Professor Gachi, I'll come back to you, but Mr. Akpeng, so what Professor Gachi is saying is that, it's too simplistic for government to say, or President Akufo-Addo to say that the commercial banks are to blame because a few things were not looked at. Inflation, and I'm telling him that inflation is relatively low. Guta is saying that the figures you are churning out does not commensurate with what's happening on the grounds. What will be your reaction to both statements? Yes,
the interest that is passed on to the customer is mainly comprised of the GR, the Ghana reference rate, plus a spread. And each bank...
What's the spread? What's the gap with the spread? Do you have a range?
It differs from bank to bank.
Okay.
And
but there must be a cap, so that we are sure that the various commercial banks are not taking us for granted. There must be a cap.
Yes, every bank has its own cap. And I can't isolate any one particular bank.
But is there a regulation on that?
No, there's no regulation.
There's no regulation, so it's free range.
There's no regulation because...
So it's free range.
Exactly. There's no regulation because the cost of mobilizing deposits differs from one bank to the other.
If you say the cost of mobilizing deposits, exactly what you mean by that?
Yes, supposing your deposit base comprises very expensive deposits, maybe fixed deposits, comprising about 60% of your deposit base. Certainly, your cost of deposits is not as cheap as somebody who's having about 70% of its deposit base on the current accounts.
Okay.
Because you are paying so much to the depositor to attract the deposit. And certainly it becomes part of your cost of operations.
Okay.
And therefore you have to pass it on to your borrower.
But Mr. Akpeng, let me ask you a very sincere question. Do you find it worrying that the lending rate the gap between the policy rate and the lending rate is quite high? Do you find it worrying at all?
Yes, it is. Okay. Because a lower interest rate has a ripple effect, a positive ripple effect on all of us.
Like?
There's economic growth, the multiplier effect of credit, because what is low, you attract it becomes attractive for the private sector to access loans and cheaper. And therefore, more money going to the private sector would stimulate the economy. So it's positive for us. And once this economic growth, there's more business for the banks to lend more. So banks are also interested in making sure that interest rates actually come down. But then the fundamentals don't support it.
Like what? Let's appreciate what your fundamentals are.
Yes. Let me go to statistics from the central bank on the financial sector performance as at Q1 this year. As at February last year, the cost-to-income ratio across the banks was 76.5%. As of February 2021, it shot up to 77.2%. So certainly, cost of operations for banks within this 1 year period has gone up. It's not come down. And therefore, the customer can't have that benefit. The borrower can't have that benefit. Because of prevailing economic circumstances, we are still in a COVID-19 era.
Dr. Akpeng, you must appreciate the fact that the commercial banks are also operating under very difficult conditions.
Yeah, that is an indictment on the commercial banks and whatever we are saying here. Because operational costs should differ from bank to bank. It shouldn't be that all the banks operate under the same cost. And so the efficiency of one bank, therefore, will pull down its lending rate. But if they are behaving the same, it means that they are formed a cartel. But they talk among themselves. And then Prof was also making reference to how it's not possible for the commercial banks to follow through. No, they should. Because otherwise, he's not putting any relevance to the base rate reduction. If the base rate is reduced, automatically it should have some relevance on their operation as well.
But Mr. Akpeng says there's actually some ripple effect, just that it's not as significant.
Nothing is happening, I'm telling you. And when there's no semblance of, when they are behaving the same and their rates are the same, that shows how, because elsewhere in other countries, they put a base cap. That's why the responsibility also lies on government to do something.
Oh, you mean the Bank of Ghana?
Because there should be a control of the trade of money. It shouldn't be that they are left uncontrolled. That's not how it should be done.
No, but the Bank of Ghana controls, regulates the
and that it should be done well. Okay. There should be a compelling mechanism for them to pull along. Because in other countries, they put a base cap on their lending rate, and then most of them diverted into this country to come and enjoy the room
but that's why we are having here. That's why we have the Ghana reference rates, no?
Yes. Yeah, but whatever it is, they should hover around, and there should be a semblance of competition where you see that one bank is charging low. Otherwise, we say that all their operation cost is the same, but it shouldn't be the same. The efficiency of a bank will make its operation cost also less, and then pulling its rates also down. Otherwise, they are just extorting. Whatever thing they are doing is very extortive. They know that there's a huge gap here. There's limited controls on their activities, and they are taking a full advantage on the depositors and then the borrowers alike.
So for you, you don't think that we're being treated fairly at all?
No, they are taking advantage. They are having it all. Look at, if we compare companies that they are doing well, all of them are banks. They are the most profitable, the juiciest companies ever. They are taking it all.
Mr. Akpeng is not smiling at
all. They are taking it all from us. It's a rip-off. And that the earlier they look, that they treat us as customers. Then when they use the risk factor as the basis of this thing, it's unfair. Because you have all department for risk. You have your legal team and all that. You have the responsibility to do the necessary due diligences on your clients. And then your negligence of duty. And then you pile up so many recalcitrant customers, and then you spread up the risk among the otherwise good ones. It means that you don't know what you are doing, and you are just taking advantage.
He has a point, Mr. Akpeng. Yes, you agree?
Yes, my colleague is alluding to the fact that the spread is the same for all banks. It isn't so.
He means that what he's saying that the risk.
Yes, the risk is peculiar to each individual customer. So customer A would have a certain risk rating. If it's lower.
No, so you mean that the interest on loans, it depends on customers? No, I think the banks have the same interest for all customers.
No place. If you do a shopping from one bank to the other.
No, I'm not talking about different banks. For instance, let's take Bank A.
Yes.
If interest on loans is 21%, it cuts across. No matter which customer you are, what category you belong to, whether you service your loans or not, it's 21%, no?
There are customers who fall within a group, say, employee salary loans.
Right.
Employee salary loans. So when the bank decides that the spread for employee salary loans for this group of employees from company A is this, then of course it will be passed on to. They all enjoy the same rate.
So do you do the same for like the businesses, for instance, Guta?
Exactly. Each individual corporate account would have a specific risk rating, which will determine the spread that we added to the Ghana reference rate. So it's not like it's cast in stone where every bank says, I'm adding X% to the GR, and therefore customers take it. It doesn't work that way.
All right. When we come back, we'll look at how the huge lending rates or the interest on loans is affecting businesses, especially the Ghana Union of Traders Association. We want to paint a picture of how this is going to affect them, especially with the AFCFTA happening. We are hosting the secretariat here in Ghana, and whether businesses will remain competitive. When we also come back, we'll look at the specific challenges the commercial banks have and how together we can resolve it. This is Business Focus, your most authoritative business analysis program. We'll be back. I can't read the ABSA thing. I don't know. Yeah, type C. Welcome back to your most authoritative business analysis program here on TV3. Dr. Joseph Obeng is president of the Ghana Union of Traders Association. Also here with me in the studio is Mr. Solomon Tettey-Akpeng. He's with the Chartered Institute of Bankers, and joining us on Zoom is Professor John Gachi, who is the UCC Dean of Students, Business School, Dean of Students at the Business School. And we are discussing the disparity, if you look at the lending rates and the policy rates by the Bank of Ghana. So let me come again to the studio and engage you, the president of GUTA. Let's look at how this is challenging for you. Okay, I know you've said it's over the period that the gap, the disparity is a challenge. The reality on the ground is that we want you to tell us how this is affecting access to cheap credits.
Okay. Before I come that, I want to take the opportunity to also point to a certain fact that the banks were using as the reason for overcharging us with those lending rates. Because they were saying that we don't have fixed address, and it was difficult for the banks to trace their customers. Now there's the GPS system that have been introduced, and then they can watch their phone and pinpoint whatever corner their customer is, and they are still using those as a reference. The reason why they are overcharging us.
So we are minimizing the risk.
The risk is being minimized by the day,
but the
and they
cost
know
of lending is still high.
Exactly.
Mr. Akpeng,
how do they prune down the bad borrowers? How do they prune down? Because they have their legal team, they have everything. They lots of due diligence lies on them. And so you were asking about how this thing is affecting us. This, to tell the truth, the bane of our difficulty in production, trading, and all that is because of capital acquisition is very high in Ghana. Let me tell you, if we talk about cost of doing business, let's compare ourselves with Togo. Togo is not a manufacturing hub. I'm just giving you a very simple analysis.
Okay.
It's not a manufacturing hub. It also does trading like we do. So they import goods into Togo, and we also import goods into Ghana. But how many times have you seen the Togolese coming in droves to buy finished products from us? Every day you see our mothers and sisters going to Togo to buy goods. It means that the cost of doing business is lower there. In the sub-region, we are losing out. We go to Nigeria to buy goods and all that, rather than the vice versa. Because when you put up the cost of doing business, it becomes so high, including the duties that we pay, the cost of borrowing, and all that. And so it makes it very difficult. And now you also realize that we are always fighting the foreigners among us. Because while the Chinese is coming with 3%, then maybe the Turkish is coming with 5%, the Egyptian, Moroccan coming 3 and 5, and all that. Maybe Nigerians coming about around 15%. I'm at 23%. So on the word go, I'm edged out. And so I'm so frustrated. And then I start fighting, and they would say that traders, they are afraid of competition. But that is not so. So this thing works against us seriously.
Okay. Professor Gachi, okay, we've lost him. We're hoping to have him back join us. But Mr. Tettey-Akpeng, I mean, this is bread and butter issue for these traders. Okay, Professor Gachi, you're back.
Yes.
Okay, so these are realities on the ground. How do we resolve the many challenges we are faced with? Clearly, I mean, others are getting the loans at very, very cheap rates, and we are over 20%.
Well, I think this is a major concern. And I also think that we need to rethink about the risk profiling of customers and businesses. And we also need to identify the reflection of the management of the economy on some major indicators. I think my colleague in the studio talked about how the cost is actually going up for doing banking business within the banking sector. So you need to be questioning yourself what goes into the cost structure of the banks that is going up, what goes into the non-performing loans, that even after the banking sector cleanup, etc., it has not gone down significantly. If you have these two things existing in the banking operational structure, there is no way you will see significant reduction in the lending rate. And that is something that we must confront seriously. It's as if we are not discussing this as a part of the package we are looking at this evening. To a large extent, the non-performing loans within the banking sector are still very high, coupled with the cost to income ratio, which is also disturbing. And then risk profiling, I believe there should be some change in the risk profiling. Because if you take university workers, you assign the same risk point to them, irrespective of his income level, irrespective of his status in terms of the income he's earning. I do not think that is a good reflection. So there is a need for us to look at the risk profiling within the banking sector as assigned to customers. That is an important point I think that we shouldn't run away from. Then we also need to see the role of government in the debt sector in general. What the bank gives you, it makes you a debtor to the bank. But the government have been rolling out a lot of issuance of bonds. And we are being told that the banks are being attracted to the bonds of government more than being attracted to giving out credit to the private sector. I am told that some insurance companies are also facing the same challenge, that their portfolio that they are dedicating to the bonds issued by government is so high, some to 70%, some up to 80%. So they are also not giving cheaper credit to the banks for on-lending as they used to do. These are issues that we shouldn't blame on one sector or one stakeholder within the discussion of interest rate or lending rates in Ghana. We need to address this key development that we are seeing. If not so, the Bank of Ghana can, through whatever means, reduce the policy rate to even 10 or 9, but the lending rate will not go down significantly.
Thank you very much, Professor Gachia. I wanted you to comment on the financial sector cleanup levy, but I should think that may not have a direct impact on interest on loans. So let me just have you let you have the final take on this one, Mr. Tettey-Akpeng. So he says that we should have a change in the risk profiling, so that you need to categorize what your customers are. But you're saying you're doing that already.
Yes, we're doing that already. In fact, there are customers watching us who this discussion doesn't affect them in any way, because they are enjoying very fine rates from the banks because of their risk profile. Yes. So depending on your risk profile, you think the interest rate is high. Others think they are okay because they command such a borrower risk rating, which the banks find very attractive. The issue is that the probability of default, if we should all work to drive it down, then the customer, the borrower, will have the benefit of a lower risk premium. Okay,
but do you agree that the solution is not just to tell the Bank of Ghana to investigate what is causing it, but to engage the associations, engage the regulator, and also engage the economic agencies?
Yes,
do you agree?
Yes, I agree.
As suggested by Professor Gachi.
Various stakeholders should come together and address the issue. And like he said, the cost of doing business in Ghana is high. And the cost of credit is only just an aspect of it. So we must look at it holistically. Why he thinks he's paying so much duty on imported goods. That is also a cost to him. And that also has to be addressed. The cost of credit is just one part of the whole equation.
Okay, so I mean, we are hoping that I'm sure government is listening. So we need to engage all the various stakeholders so that together we can be, because I mean, clearly it is really affecting cost of doing business here in Ghana, and we can't really blame anybody. But I want to say thank you to you, President of the Ghana of Traders Association, Dr. Joseph, for being on. Say thank you to you, Mr. Solomon Tettey-Akpeng. Yes, I got it right now. He's with the Chartered Institute of Bankers. Also joined us on Zoom is Professor John Gachi, who is the Dean of UCC Business School, helping us to understand what we should be doing in ensuring that we bridge that gap between lending rates and the policy rate. This has been Business Focus, your most authoritative business analysis program here on TV3. We're live on TV3 Ghana on Facebook, and this program is brought to you by APSA. I want to say thank you to you all for making time to watch us. We'll be back same time next week, Monday. My name is Eton Amse. Many thanks for your time.